Welcome back, everybody. I'm Jeff Barton, and I'm your voice in the mortgage industry. This is the Mortgage Minute. We try to bring information to you on a daily. Been out of action for about 3 weeks. A lot of family issues, as well as trying to get everybody in my house vaccinated with the COVID shot. Let's get right to it. Rates. 3.11 for the 30-year fix. The 15 is at 2.53. The FHA is at 2.62. The jumbo product at 3.14. And the 5/1 ARM product is at 2.38%. Now, we've seen the rates really sideways for about 2.5 weeks. We saw the initial rise to about 3.5% off of a 2.75 low for a 30-year fixed. We're now kind of in the middle of that. One of the reasons that we are is because there are a lot of economic factors that go into what is happening with the rate. The basic one is if, in fact, the 10-year yield, i.e. getting people to buy U.S. debt, if that goes up, rates will go up. But we have seen a stall. We had seen rates, the yields rise from about 0.5 point mid last year to where they are currently now. What is the 10-year? The yield is at 1.57, and that's where it stayed. It's in that range, 0.5 point to 1.5 points. And it stayed that way, and it was predicted to stay that way, and we will probably see the rest of at least the spring, if not the summer, around these rates. There is no real push to get the economy, I guess, back in a situation whereby we could raise rates artificially by saying we're ending the tapering done by the Fed, i.e. they'll stop buying mortgage-backed securities and they'll stop buying bonds to the tune of $120 billion a month. If that happens, you will see rates rise because the banks need to make a margin. As it is right now, it's pretty easy to sell a lot of these things because we just know that the Fed is going to purchase them. A couple other things here, a couple of products that are coming out in the market. One of the things that Fannie Mae and Freddie Mac are trying to do is to increase the refi rate for lower income people. Now, there is a huge divide between people who have the ability to earn a good living and refi their house and people who don't have the opportunity to earn a good living or currently aren't earning a good living. And what I mean by that is, anybody working and making a living of over $50,000 a month, $50,000 a year, and a spouse making the same, so their household income is $100,000 a year. That would be a pretty good living. But we have many people who are couples making $30,000 each, $60,000 a year, but those people have been really locked out of the refi market. Fannie Mae and Freddie Mac is trying to address that. One of the things they have come up with is a way by which people in a certain group, what they call a bucket, those people will be able to refi if they can meet certain criteria, and here they are. Making that the property is less than $300,000. That the rate must be lowered by 0.5 point. The LTV has to be 95%, the debt-to-income ratio 65%, and that's pretty good, by the way. And the FICO score has to be at least 620. They would waive the refi fee. As everybody knows, any refi being done right now, there is a 0.5 point fee tacked onto it. A lot of what Fannie and Freddie did last year in order to slow down the market, in order to make sure that they had enough reserves to cover what any shortfall would be if there was a market correction or a market fall. And that's what they did. They added a service-related fee of a 0.5 point on each and every refi loan. Purchases are exempt. But on this particular refi product and in this particular grouping, this bucket, they have waived that fee, and this is a good thing. So people in the low income, people who have a home, own a home, but haven't been able to refi because they just don't make enough money for the debt-to-income ratios, this is a good program. There's a disparity between what Fannie and Freddie say. They say 2 million people can be affected and be helped by this, but the general consensus in the market is that only about 1 million can. At any rate, 1 million is 1 million people that can be helped. The question is, why didn't it come out sooner? Why do we wait a year on that? Why is there another year's worth of interest payments that these people are making? Should have come out sooner, in my opinion. High-income households save 10 times the amount than lower-income people. Another article at the Housing Wire, if you want to go to housingwire.com and read the same thing. That's what we're talking about. We're talking about the gap, the big gap between people who have and people who have not, even if you own a home, right? Let's see, forbearance, 4.47% of all mortgages are still in forbearance, about 2.25 million people. The non-QM and the jumbo products are great. Anyway, I'm Jeff Barton for the Mortgage Minute, and we'll see you next time. Thanks for tuning in.